I just go long, very simple. And I just sell puts most of the time. I do sometimes do credit spreads, and I do jade lizards on certain stocks I'm not that familiar with. I'm primarily I sell cash secured puts.
And do you find yourself doing it on mainly a few stocks, or do you do indices as well?
No, I don't do it on indices, and the reason is because indices and ETFs, the premiums are not as high. All right, because when you sell options, you need very high premiums to make it worthwhile.
It's going to be a fun conversation. Came across Adam's YouTube channel, and he's got just a few subscribers, around 1 million. Just a few subscribers.
Took quite a while to get there.
Yeah, it took still, it's 20 years to become an overnight success. I know Will knows that story also. This is the High Conviction Podcast by Granite Shares. My name is Michael Guyad. My co-host is Mr. Will Ryan, and our guest for the Rough Hours, Mr. Adam Khoo. Will, speaking about becoming an overnight success, you should introduce yourself and Granite Shares.
Yes, sir. Hi, everyone. Will Rind, founder and CEO of Granite Shares. We are an ETF issuer. For those of you not familiar, we are based in New York City. Manage just over 10 billion in a bunch of different ETF strategies. Probably most well known for our leveraged single stock ETF offering, which provides leverage exposure to popular companies like Nvidia, Tesla, etc. But we have business in the US, in Europe, and in Asia as well.
And of course, Mr. Adam Khoo, who is in Singapore. Adam, introduce yourself to the worldwide audience.
Yeah, so I play so many roles. I think primarily my main role is I'm a retail investor. I'm a self-directed investor in the US equities market, primarily specializing in large caps and mega caps. And I trade a lot of options by the side almost every single day. And I love teaching. So I teach the public via my YouTube channel primarily. And I also teach through my courses, which are both pre-recorded as well as I've got live master classes that I run a couple of times a year. And I've got a subscription as well where people kind of can look over my shoulder and watch how I trade and invest every day. And they get a deep dive into my portfolios and my research.
How'd you get started?
I started teaching in 2005. I started investing back as a teenager. What actually got me interested in the markets was my grandfather, which was interesting because, during Chinese New Year, which, by the way, we are in right now, it's still the 5th day of Chinese New Year, parents and grandparents would give kids money. They call them red packets. I don't know if you're familiar with that. Call it ang pao. So when we were young, my grandfather would give all his grandchildren, I was one of many, these red packets. But the only difference was he didn't just give cash, he gave share certificates. And back then there was no internet, so it was a physical certificate. And, most of us would complain, why isn't he giving us cash? Why does he give us these certs? And then he would explain to us that if I give you cash, you're paid only once. If I give you shares of a company, you own a piece of a money-making machine that can pay you for the rest of your life. And I was like, wow, money-making machine. So I was kind of fascinated by the idea. And so that's what planted the seed. So ever since I was young, I was too young to open a brokerage account initially. So my mom lent me an account and I was investing with her money. And I started with the local markets. And then in the late 90s, when the internet was more available, when I was in university, then I started trading and investing in the US markets. And I was very lucky because I caught that .com boom in the late 90s. It was pure luck. It was not skill at all. And I managed to get out quite near the top when things were very overvalued. So that's how I made my first little pot of gold back in the 2000s. And then in 2005, I started teaching. I created this Wealth Academy Masterclass to start teaching. And then in 08, 09, there was the great financial crisis. So I got most famous after the crisis because I wrote this book called Profit from the Panic, which became a #1 national bestseller in Singapore at the time and the region. It was #1 on Borders. I don't know if you've heard of Borders bookstore, which used to be one of the biggest bookstores in the world till they closed.
You're basically revealing our collective age in saying that, because I don't know if the younger audience knows.
Yeah, right. Yeah, so I'm 51 this year.
Any bookstore.
Any bookstore, that's right.
Yeah.
What's a bookstore?
Yeah.
It's like my daughters are 21 and coming 20, right? So I was mentioning a thumb drive. They was like, what's a thumb drive? It's a USB. What's a USB?
Time moves on quickly.
Borders will have had that, is one of the comments. So some people are familiar with Borders. That's good to see that.
It was called like the Starbucks of the day. You could go to Borders, have a coffee, read your book, meet friends. Remember that?
Yep.
Yeah. Everyone was friendly. So that's how I started. I mean, like most people, when I started, obviously, I didn't know what the hell I was doing. I was going around in circles, doing all the stupid things that people do. And then, through a lot of hard knocks, busting a lot of accounts and, learning from it and kept moving forward. I guess, if it was really about the money, I would have given up long ago. If it's just about the money, you'd give up long ago. But I was just fascinated by the markets. And to me, the markets are kind of like playing chess with the rest of the world. It's a strategic thing, right? I love winning in a way. So that kept me going, that kept me learning, and that kept me fine-tuning my approach until I found what really works for me consistently. So, I mean, in the early days, I traded almost anything. I traded currencies and CFDs, penny stocks, you name it, I traded it. Options. I started options years ago, but did it in a very stupid way initially. And then over the years, I settled into what now gives me very, very consistent returns, which is basically just being invested in great companies and being a net option seller and focusing primarily just selling puts. That's all I do, really. That's what gives me most of my bread and butter.
How did you kind of, I guess, end up in that place with regards to selling puts and your, I guess, realization that the options is going to be the main thing that you do? So how did that journey evolve?
So I probably started learning options about 15, 16 years ago. And at that time, there was a company, the first company to come to Singapore to promote options trading was Options Express. I'm not sure if you've heard of Options Express. So they did very well and they were running all these option courses. And so I went for many of these courses. And like most courses, they would primarily teach retail investors how to buy options, right? You think a market is going up, you buy a call. You think a market is going down, buy a put. So primarily that's how most people traded. And that's why most people lost all their money. And then later on, I started using Think or Swim by Tom Sosnoff, right? But at that, and so when I started using Think or Swim and I started sharing to my friends, the Monetary Authority of Singapore got a complaint from Options Express. And Options Express said that, Think or Swim is not licensed in Singapore. They should not operate here. So I got a letter from the government saying that stop talking about Think or Swim because they're not licensed in Singapore. So I was really pissed off because they were a much better platform than Options Express, right? They were just not licensed. So my team, we flew all the way to the US and we contacted Tom and his team and said, you got to come to Singapore, you got to get a license here. So we were the ones that actually invited Tom and his team to Singapore, I think it was 15 years ago, to register Think or Swim. So I was one of the biggest promoters of Think or Swim, actually, until they got bought over by TD Ameritrade and TD bought over by Charles Schwab. And now most people can't use it anymore in Singapore unless you're an accredited investor, right? So there's a bit of an interesting side note. So anyway, so like most people, I started buying options, right? You buy calls, you buy puts, and again, you don't get consistent results. So once in a while, when a stock goes up like crazy, you make a lot of money, but more often than not, it doesn't. It goes bloody sideways, right? Or goes up too slowly or goes down. And so in the long run, you find that buying calls and puts are kind of like playing the lottery. You get a few big wins once in a while, but most of the time it doesn't go up. And so at the end of the day, you don't make that much or even lose. So it's very frustrating. And it's something that most people actually experience. And then it was later watching Tom Sosnoff. And at that time he left and he started a Tasty Trade, right? So he started talking a lot about being a net option seller. And initially I tried it. It didn't really work until I realized it was all about, number one, sizing your position. And number two, trading on the right fundamentally strong stocks. So I realized that, especially in options it's not just about the technicals. I used to trade purely on technicals. But now I realize that you have to really understand the underlying really well. You have to really understand the business behind the stock, even if it's a trade and not a long-term investment. So today, I only trade options on companies that I'm very familiar with, companies that I look at every single day on my watch list, companies which I think are, strong and they are well valued, right? And again, how did I stumble across this? Was again, I was trading almost everything. I was trading, spreads. I was trading jade lizards. I was trading, selling puts. And by doing everything, I basically kept a record which one actually gave the most consistent results. And after many years, it's like, shit, it's like 90% of my profits are coming from just selling puts. So I used to do a lot of covered calls. I used to do a lot of selling of bear call spreads, right? And after all the years, I compiled my results and I said, shit, I hardly made any money. Okay, suddenly I lost money and all this effort, hardly making any money on the short side. And that's why I don't short anymore. I used to do a lot of shorting in the old days. In fact, I used to be like a pairs trader. Every counter I long, I'll short a corresponding one. I used to do that, right? And again, over the years, I found that, shit, if I add up all my shorts, I hardly made any money. And in fact, they were kind of like pulling down the performance of my longs. So over the years, I kind of like, and that's how I streamline to what I do today, where it's really simple, but it gives me very consistent results. Just go long, very simple. And I just sell puts most of the time. I do sometimes do credit spreads and I do jade lizards on certain stocks I'm not that familiar with. I'm primarily I sell cash secured puts.
And do you find yourself doing it on mainly a few stocks, or do you do indices as well?
No, I don't do it on indices. And the reason is because indices and ETFs, the premiums are not as high. All right. Because when you sell options, you need very high premiums to make it worthwhile. So for example, if I sell a put on SPY, for example, at 30 delta. Okay. So my requirement is when I sell a put, the premium I get divided by the strike price needs to be at least 2%. For every 45 days I sell. Okay. So if you try to do that on the SPY, all right, getting that premium, your strike price will be very close to the market price. Because, the volatility is not that high. But if you do it on Meta or Microsoft, you get a strike price relatively further away. So I love to do it on indices. I would love to, but just premiums are not great. Unless, of course, there's a major crash. If you've got a major panic and VIX spikes to 50 or 40, okay, maybe on that day, I will sell a put on SPY.
And do you find yourself sort of gravitating? You mentioned that, you do it on stocks where you particularly like the company or know the fundamentals.
Absolutely.
And very big, like, do you have a few favorite stocks that you end up using all the time?
Yeah. And these are mostly your mega caps, Nvidia's. So I invest in the Max 7 minus Tesla. I've always been a bit fearful of Tesla because it's really overvalued. Yeah, and I've never been comfortable with the automotive business because I've always found that it's a very competitive business with not much pricing power. So I tend to stay away from that.
It's interesting hearing selling puts, because nowadays everyone talks about selling calls, right, as a way of generating income. I mean, there's a proliferation of funds that just do that to generate some yield. And it is clearly suboptimal, no?
Okay, so here's the thing, right? So when I first started, I used to sell covered calls on all my positions. And what I found, okay, so the problem is this, right? So, okay, let me give you an example. So I bought, and this is not too far away. So I bought NVIDIA. Let's talk about the post-stock split price. So I bought NVIDIA at $15. This is the post-split price back in October 2022. And at that time, my valuation for NVIDIA was $22. So at 15, it was undervalued. Now, when NVIDIA went to $30 and I thought, okay, it's a bit overvalued, I decided to sell covered calls on NVIDIA at $30, right? And the darn thing kept going up, as you guys remember. So it went up to 30 and then 31, 32, 33. And so I kept rolling my call up because I don't want to lose my shares, right? So I rolled the call up. But it comes to a point where it keeps going up and you can't roll it that much anymore. Okay, yeah. Because it's like, right? So I say, okay, screw it. I'm letting my shares get called away. So I lost all my NVIDIA shares at $38, which I thought, okay, is fine because it's overvalued. Nothing wrong selling an overvalued stock. And then they came out with a blockbuster earnings report where their free cash flow went through the roof. So I had to quickly revalue it. And so when I revalued it, I found that it was now worth, I think at the time, about $48. But the share price was already at $52. So it was way above my valuation. And according to my strict rules, I can't buy it back now because now it's overvalued, right? But I said, excuse me, I don't know if I can say it, but I said, screw it. I'm going to buy it back. But unfortunately, I didn't buy back everything. I bought back slightly more than half of what I got called away. And I'm holding it to today. Now, of course, I made money on it, but if I didn't sell that darn covered call, I would still have my full position in NVIDIA, and today I would have made a lot more. And that's just one example. I can give so many more examples. Meta is another one. So again, 2-3 years ago, I sold covered calls on Meta, got called away. Again, I had to buy it back at a much higher price, and I couldn't buy back everything. I bought back half, and now I'm made a lot of money on Meta, but I could have made like double what I made on Meta. Right? Same with Palantir. So over the years, I've looked back and I found that, see, when you sell covered calls, yeah, you're making that premium, you're happy every month. But the moment that stock runs, the opportunity cost that you lose is not worth it. It is not worth it. Okay? So today, I still sell covered calls, but not on growth stocks. Mm-hmm. I only sell covered calls on boring defensive cyclical stocks like McDonald's, like Pepsi, like Lockheed Martin. So these are the ones that won't run that much, right? So they get a bit overextended. I sell calls. Most of the time, they would go back to the mean. And even if they get a bit more overextended, I roll the call up 1 or 2 times. Usually the stock will come back down. So that's it. And actually, I've known this for many, many years. It's not something I just discovered. I knew it for many, many years, but sometimes you still do dumb things. So selling the calls on Meta and NVIDIA, 3 years ago, I knew I shouldn't have done it, but it was just too tempting. Like, wow, the premiums are so cool, right? I don't think it can go up so much. See? And the market slaps you. Every time you don't follow your rule, the market gives you a slap. So yeah, one of the rules. So now, I've got my community of students. And again, my students always come up to me, Adam, I want to sell a call on Palantir. I see, I'm going to give you a tight slap right now. I saw NVIDIA, I say, no, learn from me.
Let's talk about the community of students. So first of all, when did you start getting into the teaching side of this? So you mentioned you traded penny stocks, you did pairs trading, you did all kinds of things.
Yeah.
Found your groove, you found what your specialty ended up becoming, focus on the options. But why actually teach it?
I've always had a passion for teaching, and that began way before I taught investing. I don't know if you know a bit about my background. All right, may I share a bit with you?
Sure.
So, Singapore is a very competitive society where parents want their kids to do well in school and get a good job, right? So I was one of those black sheep kids. So I was a very lousy student. I was a troublemaker in school, and I was expelled when I was 9 years old. In Singapore, we call it primary school for fighting. So I was a troublemaker, basically, right? And I did very badly for all my examinations, and I couldn't get to a good school in Singapore. So Singapore, like being like an Asian, high-performance Asian country, is like every parent's dream is that my kid has got to go to a top school in Singapore. Okay, I ended up in the bottom 3 schools in Singapore. Okay, so in desperation, my father sent me for a motivational program, which was called Super Teen at the time. And so this was back in the 80s. So when I went for this program, I was exposed to, concepts of, self-motivation and believing in yourself. I'm sure you've heard of Tony Robbins.
Mm-hmm. Sure. Yeah.
So it's very much like a Tony Robbins program for kids that I attended in the 80s. And I don't know if you've heard of this concept called mind mapping, or like all these memory techniques that were taught by Tony Buzan, this memory guru from the 80s, right? So basically this program was influenced by Tony Robbins and Tony Buzan, all these great people who taught people how to learn better and to be more self-motivated, right? So I went to this program at 13 years old, and it really changed my life. So to cut a long story short, after the program, I topped my school, which was not difficult because it was the bottom 3 schools in Singapore. But I ended up going to the top junior college, and I went to the National University of Singapore, and I was ranked among the top 1% of students in Singapore. So I was basically from the bottom student to one of the top in Singapore. This was back in the 90s, right? So a lot of friends would come up to me and say, what the hell happened to you? How do you manage to, top the school? And I remember back then I would very passionately, share with my friends all my techniques. I taught them mind mapping. I taught them how to set goals. I taught them how to use memory techniques to memorize a list of words. And I guess it made me feel very, very important. All right. And so I wrote my first book called I'm Gifted, So Are You in 1998. And that book became a #1 bestseller in Singapore. And that's how I got famous, through that first book, which was teaching kids how to become top students. And the whole point of the book was saying that if I, from the bottom of Singapore, can reach the top, anyone can do it. So that's how I got famous. And so I started actually teaching students how to study. And initially when I taught, I didn't get paid. Who the hell will pay me, right? So I did it as a volunteer for community centers, for churches, and for all these non-profit organizations. And then I built a big following. So when I graduated from university, I thought, okay, why not just do this as a career? All right. So I started my company, Khoo Learning Technologies Group. And then I started running courses for students. And today it's still running. And in fact, in Singapore, 1 in 4 students attends one of my programs today. 1 in 4 in the entire country. So we are the biggest provider of enrichment education in Singapore. Okay. So that was how I actually started. And then from there, I got into corporate training because it so happened that one of the parents whose kids did well after my program, he was one of the heads of AIA, American International Assurance at the time. And so he said, hey, could you train insurance agents to be more motivated to sell insurance? I said, I've never done that before. I train kids, I don't train adults. I said, just give it a shot, right? So for my first gig, they sent me to Shanghai to do a talk for just an hour to 300 of their platinum premier agents, a motivational talk. So I was kind of like the Tony Robbins of Singapore at the time. And I gave them all this believe in yourself stuff, right? So it did really well. And I got a contract to train 1,600 agents in AIA. So from there, I did a lot of corporate training. I trained a lot of the insurance companies and so on and so forth. And that's how I got so-called very familiar with the finance industry through the insurance thing. So during all this time, I was doing that, and of course, I was making my money. And by nature, I'm a very frugal person. Something I've learned from my dad and granddad. So I saved most of my money, and I was investing on my own. And like I said, initially, I was going in circles, and I kind of like got my groove on how to invest and all that. So I've always had this passion of teaching what worked for me. So when I found out what worked for me in studying, I taught that to students. When I found out what worked for me in motivating myself, I taught that through a program. I started a program called the Patterns of Excellence, which is basically teaching neuro-linguistic programming, which is a skill of how do you manage your emotions? How do you communicate more effectively? So I was doing all that. And then in, again, 2005, I started my first investing course, teaching people how to invest. And I remember at that time, back in Singapore, no one, I wouldn't say no one, but hardly anyone had heard of an ETF. It's like, what's an ETF, right? And back then, hardly anyone knew how to invest outside of Singapore. So you're all buying Singapore stocks. US stocks were like a very foreign thing. Like, what, how do I buy a US stock? Because at the time, the internet was still very new, right? So I would say I was probably one of the first people to teach Singaporeans how to invest in the US markets and to teach Singaporeans how to buy an ETF back in 2005, 2006. Yeah.
Just as a matter of interest, but how do you think that's changed today? What do you think the average person in Singapore is very familiar with ETFs, and how they sort of reach?
Very much. I would say probably, within, easily 8 out of 10 who are interested in investing, maybe even 9 out of 10 who are interested in investing would know what's an ETF.
And the access to the US market as well, right? The availability for people now to access the US through trading apps and things has changed dramatically.
Absolutely. So I would say within the retail community, I won't be surprised if almost half would have some exposure to the US markets. Almost half. I mean, just my very rough guess. Yeah. Anyway, the Singapore markets don't perform that well. All right. To give you an idea, from 2013 to 2023, the Singapore market went nowhere. It was flat for 10 years. In 2024, last year, we had the best year in 7 years and the market broke out. But it was primarily driven by 3 companies, which were the 3 banks in Singapore. Because in our index, we have got 30 stocks in our index. 30 stocks, right? But half the market cap comes from 3 stocks, right? Which are the 3 banks, which are the only things I invest in. Because the 3 banks to me are great for yield. They are great for yield. They give you kind of like a 5 to 6% yield, and it's tax-free.
Yeah, you have a video on YouTube about from 8 years ago, trade like a casino. Since you said there's a lot of interest on the investing side with those in Singapore, is it investing or is it trading? I mean, what is the sort of time frame with which people deploy their capital?
Everyone's different, but I would say for the majority of people, most people are more trading oriented than investing oriented, because human beings always want fast money. They are impatient. So most people are always more trading oriented. But what I do my best to educate people on is, especially when you're first getting started, it's always easier to be an investor. It's always easier to be an investor because you don't need to be right on timing as an investor. You just need to buy a good company. Even if you're bad on timing, eventually it's going to come back. But as we know in trading, it's a lot about timing, and not everyone can time the market very well. Even the best traders in the world, you can't get it right all the time. All right. So even for myself, the majority of my money, I would say more than 80% are in investments. They're not in trading, they are in investments, right? And it's a minority which I trade. And even though I trade the minority, again, the majority of what I trade in a way is non-directional. Okay. So again, when I sell puts on a great company, I don't need the stock price to go up to make money. A stock price can go up, it can go sideways, it can go down a bit. I'll still make money. Unless, of course, if the price drops below my strike price and it's going to expire in the money, then I may be challenged. But if it's a great company that I don't mind owning more shares on, I don't even mind being assigned the shares and holding it for the long run till it recovers, or I may roll the put down right? So to me, when you sell cash secured puts on solid companies that are undervalued, that you know will rise eventually, it's almost a holy grail. It's almost a 100% whip. Okay. The only time people get in trouble selling puts is when they do it on more speculative companies that may not be consistently profitable or maybe very overvalued or the over leverage. So even if you sell puts on a great company, but you over leverage and there's another 2020 COVID crash or great financial crisis and you get margin call and you are not able to hold a position, then I'm sorry, you won't be there when the market rebounds. Yeah, right. It's all a matter of discipline and making sure that in the worst case scenario, you don't get forced out of the markets.
What are the, I guess, big investment themes in Singapore at the moment? Like people, like how do people think about investing? Can you talk generally about, what you think are the top sort of things that people care about and are investing in?
It's very hard to talk about the overall public because again, it's so segregated, right? Everyone has their own ideas. Like for example, the young ones, I guess not just in Singapore, but the rest of the world are into crypto, right? Which I'm not. I don't understand it. I've never touched it. So, those are the young ones. And
but what was you saying? So it sounds like what you're saying is that there is a sort of like in the States, there's a pretty unified narrative.
No, there's no unified narrative here. If there's a unit, then I wouldn't say there's a unified narrative, at all, right? And I'll give you an interesting statistic, right? So when I run my investment courses, again, I've got the pre-recorded ones and I've got the live ones that I do, and I run it 4 times a year. Make a guess. What's the average age of my students who attend my investing class? Make a guess.
Mid-late 20s?
No.
I would say probably, mid-30s.
Late 40s to early 50s. That's my average age. Late 40s to early 50s. 90% of my students are above 45. 90% above 45.
And what's the typical profile?
Again, all kinds of backgrounds. I've got housewives, I've got business owners, I've got all kinds. But primarily that's the age group. All right.
Okay.
Again, my thesis is, I guess the younger ones want to go for something like crypto and something faster. And it's the oldies who have been around the block many, many times. They realize that I need something a bit more consistent. So they come to me. Yeah. So people ask me, why aren't you on TikTok? I say, because that's not my audience. Okay? My 50-year-old student is not on TikTok. They're on Facebook. They're on YouTube. Yeah.
Speaking about YouTube, how did you get to 1 million subscribers? I mean, you've got some huge engagement on some of these, and they're very well produced, by the way. I know how hard this stuff is.
Yeah, thank you. I really don't know. It was more accidental than anything. So when I first started, there was no goal that I'm going to get this, golden play button. There was no goal like that. It was just to share my idea. So I started the channel in 2016, but I only started, I guess, posting regularly in 2018 or so. And I'm not a very disciplined guy when it comes to that. It's not like, okay, every week I have to churn out 1 video or 2 videos. No, it's like, I got to have the feeling. I've got to have this inspiration. I've got to watch something on the news that people are bitching about, I talk about. So it's been kind of like when I've got time, I'll do it. So it was not, there's no real plan really. But I guess one thing that helped was that the topics I talked about were pretty broad. So I talk about macro stuff. I talk about specific equities. I talk about options, right? I used to do a lot on currencies, which I don't do as much anymore. I talk about swing trading. So I guess the breadth of the topics help to bring in more subscribers. Yeah.
Yeah, really interesting. What about kind of your own views on markets? I mean, so you've got the investment side. I see a lot of stuff on AI. I see a lot of stuff on NVIDIA, AMD. Any views on how you think the year plays out? And are there opportunities outside of U.S. markets that you're looking at that could get to be bigger plays?
So what I do is now on YouTube, I do talk about macro stuff, and I've got this Outlook seminar. I talk about macro stuff, but for me personally, the way I invest, I actually totally ignore the macros. Really, I'm not saying this just for fun. To me, the macro stuff is purely for entertainment because ultimately no one really can predict the macro, right? So my investment decisions are purely based on the individual companies. So for example, even if I thought that the market was going to crash this year, it wouldn't change my decision in buying more NVIDIA, for example. If NVIDIA got cheap, it wouldn't change my decision at all. And same thing with my trading. So my trading of options, or sometimes I take individual stock trades, are purely based on the technical setup. If I see a technical setup where I think the price is oversold, I think it's going to reverse for a bounce, I will go long on the stock regardless of what I think the macro is going to be all about, right? Having said that, I am bullish on the macros, at least for this year, for a variety of reasons. Number one, you've got Trump.
US macro.
I'm very bullish on US macro. The rest of the world, I'm not very familiar. I'm very US centric in my research. So a variety of reasons. Number one, we are just at the early innings of this AI revolution. I've been a big proponent of the AI revolution ever since about a year and a half ago when I did this whole webinar called the sixth wave, the sixth innovation wave. So the fifth wave was software. The fifth wave was internet. The sixth wave is AI and robotics, right? So I'm really bullish on this wave that's going to carry us the next, 5, 6, 7 years. I think we're still at the early innings of the AI revolution. Number one. Number two, you've got Trump, who is the most pro-business, pro-stock market president I've in recent history. I love him or hate him, right? I mean, his policies are very, very bullish for the market. And number three, the US economy continues to be in a Goldilocks situation. So you've got economic growth still relatively strong. In fact, I think the Atlanta Fed real GDP now is projecting quarter one at 3-point-something%, although there's a bit of slowdown in quarter four. And then you've got the inflation data, okay, not falling like a rock, but at least it's not shooting back up, right? So you have PCE coming in line. You've got employment data that was a bit weak, in fact, which is, good for the Fed, right? So yeah, it's quite a Goldilocks situation in terms of the macroeconomics part. What else? Those are the three main tailwinds.
So I guess I was going to say, you probably don't hear as much of this, but being largely like a services-based economy. But is there much talk of the tariff narrative in Singapore at the moment? Because that's something that's very much in the headlines here.
Yeah, everyone is talking about it. Everyone's talking about it.
Yeah.
So my main concern, which I talked about early in the year, again would be, would there be a resurgence in inflation as a result of, number one, the tariffs? Number two, if there's a huge deportation of undocumented immigrants, which I read make up 10% of the workforce in agriculture and construction. So that could inflame, that could reignite wages and inflation. So the tariffs, you got your deportation and you've got your massive tax cuts and business incentives. So could that create a resurgence of inflation? That is my main concern this year. Mm-hmm. Yeah, obviously, right? Yeah. So of course, if inflation comes back and it's like the 1970s all over again, Volcker, right? Where inflation goes back to 8-9%, and the Fed is forced to raise rates, could that trigger another bear market? Hell yeah. So that is the main concern. So where do we run? Where do we hide? Well, if you look at 2022, when the Fed jacked rates up so high, everything went down, except energy and commodities and private credit. So those are the three areas to hide.
Yeah, if private credit didn't go down because there's no mark to market.
Correct. There's no mark to market. That's any good. Absolutely. Right. Also because private credit, they're on a floating rate, right? So when rates go up, they get more on the upside as well. Yeah, but what's interesting? So I was watching. I watched the 10-year like a hawk, because the 10-year affects a lot of my REIT positions. I hold a lot of REITs in Singapore, primarily for yield, and the bloody 10-year affects my REITs.
Interesting. Yeah.
What's comforting is since we started, the 10-year has been coming down. I'm trying to figure out why. So obviously the market is more concerned about a slowdown in growth as a result of the tariffs than it is on inflation. That's why the 10-year is kind of like coming down. It could just be...
That was an interesting reaction, right? Because the yields were dropping when there was that concern around Canada and Mexico, right? On that Monday. When
just for a while, search for a while again.
Right.
Yeah. Yeah. Maybe Dodge is having an effect. What should be having an effect? Yeah.
Yeah. Well, and also there's been very specific comments from not just the president, but from Treasury Secretary as well about the goal is to try and bring down the 10-year. When they talk about reducing interest rates, they're less concerned about the front end of the curve. It's about the 10-year. That I'm sure, whether people like to admit it or not, has an impact in the market.
Yeah, I like that. That was a great statement. That made a lot of sense. So actually, if you look at it, the 10-year is exactly where it should be right now. It is exactly where it should be right now. If you can stay where it is right now, if you can, within the range of 4 to 5, perfect. Just gonna stay there. So if you look at a 10-year, it is exactly where it is before the great financial crisis. So before the Fed did the whole QE crazy cut rates to zero, the 10-year is where it was. So in other words, the 10-year is at a normalized level.
Mm-hmm.
This is the normal level. So those who have only been in the markets for the last 10 years think it is abnormal, right? Because they think the 10-year should be at 2%, 3%, Fed funds at 0. They think that's normal. That's not normal. That is freaking abnormal, right? So we as the Gen X, we know this is normal. But the Fed funds has to come down, all right? Because historically, the 10-year should trade at least 100 basis points above the Fed funds.
Yeah.
So Fed funds has to come down a bit, get a nice upward sloping curve and with that.
Yeah.
Yeah.
Yeah. It's starting to normalize a little bit, but it's still, like you said, you've still got that phenomenon at play. It wasn't as bad, or it's not as bad as it was where the curve was completely inverted, but hopefully start to normalize a little bit back to what you might think is a normal looking curve.
Yeah. Well, I'm very happy where rates are right now because getting very good yield on time deposits and money. I'm very, very happy, right? Before 2022, you're so sad you put your money in a bank and like in Singapore, the time deposit rates were like 0.5 or 0.3% time deposit. But of course, the mortgage was very low as well. So, but I'm not a borrower, so I don't care about that, right? Yeah.
Does it, this has been a concern of mine for a while, but it hasn't mattered. Does it concern you that, sure, rates are normalized, but credit spreads are abnormally low? I mean, the differential between high quality and junk is non-existent.
Yeah, that is something that's a bit strange as well. Yeah. Credit spreads are low, but that's better than if they're high. Credit spreads are high, then it's a bit more concerning.
Yeah, sure.
Yeah,
but it's mean reverting, right? Like volatility.
Yeah,
it's a test. Yeah, can stay low for a while, and then explode. Should we ask our question on the High Conviction podcast? Will?
Yeah, let's do it. So, given that this is the High Conviction podcast, we always like to sort of end by asking our guests, what is your highest conviction, idea or investment for this year?
Okay, so I mean, for me, the I would say, so I got a question recently, and it's quite a common question. Adam, if you had to put all your money into one stock, what would it be? And the answer would be Amazon. And I'm not saying it's just because it's this year. In fact, I've been saying this for the last 4 years. Mm-hmm. And again, when I say that, it's not because I think Amazon is going to outperform everyone in terms of stock price performance. Especially in 1 year, because in 1 year, no one can tell which stock's going to outperform. No one can tell for sure, right? But if you're asking me if I put all my money into one stock, which I think is safe, that I can sleep well at night, I don't worry, even though the whole world crashes, is Amazon for a variety of reasons. Number one, Amazon is one of the most diversified of the mega caps. And Amazon is basically 5 companies into one. So first, you got the e-commerce business, which is not the most high margin business, but is the biggest volume. Okay. So that's number one. Number 2, you've got the cloud business. Cloud is high margin. And what I love about the cloud business is that it's very, very sticky. They've got very high customer switching cost. So for example, the entire Netflix business is built on AWS. If I'm not wrong, I think Disney Plus is also built on AWS. So if you read Netflix on their financial statements, there's kind of like a risk disclosure that says that if we ever have to migrate out of AWS, it's going to take 3 years for the full migration. Okay. So in other words, if you think about it, Amazon has got all these companies by the B's. You know, Amazon can jack up the price. So what the hell can you do? You move to Azure. It's not that simple, right? So here's a very sticky business, the cloud business. Then the third business is their advertising business. And Amazon's advertising business has already overtaken YouTube, I think about 2 years ago. Okay. So that's their fastest growing business. I think it's by growing 30% a year. And they just only started putting ads on Prime. They were putting ads on their Amazon website. So that's the third business. The fourth business is their logistics business, where they've already overtaken UPS and FedEx. So in fact, I already said 4 or 5 years ago that UPS and FedEx were in trouble because their biggest customer, Amazon, is not going to be the customer for much longer, but it's going to be their biggest competitor. And Amazon's delivery service is only 1 or 2 percentage points behind the US Postal Service. So that's business number 4. Business number 5 is their Prime membership business. Okay, that's the weakest one. All right. But ultimately, you get a very diversified business. And the valuations now, in fact, among the mega cap, I don't think their valuations are that stretched. So Amazon is not the cheapest, obviously, but they're also not the most expensive. So, well, to answer that question, right? That's my highest conviction. Not because I think it's going to go up the most, but to me, I think it's the most diversified. Is the most resilient. Let me put it that way. All right, which one would be the biggest? I've got no idea. I mean, that's why I diversify, right?
So in 10 days' time. I think I'm right. In February 20th is the day that Walmart reports earnings, and Amazon already reported. Revenue I think was 1.87 billion or something like that, and the number is supposed to be now bigger than Walmart. We'll only confirm that when Walmart reports on February 20th, and Amazon will have finally overtaken Walmart in terms of revenue. That's an interesting stat.
So, I mean, it really blew me to know that they overtook YouTube in advertising. They overtook UPS and FedEx. That. So I made a YouTube video. I don't know if you've seen it, about 2 years ago, called Amazon's Evil Plan to Take Over the Whole.
Aged well.
Yeah. But I never know which will be my biggest performance until after the fact.
Yeah, of course.
Like I never knew that Palantir would be my best performer last year. I didn't know that until after the fact.
That's been unbelievable.
What just on Palantir, because that's been a phenomenal performer over the last few months.
Yeah.
What was it that attracted you to Palantir? Because not everybody's in that stock. It's not.
Yeah. So I first bought Palantir in, again, 2022. Can't remember exactly which month, but I bought it at $11, and after I bought it, it dropped to $5. And all my subscribers were screaming at me, "What the hell you get us into this stock? What's wrong with you?" I said, "Hold on, baby, hold on. It's coming back." Yeah, but I have no idea how long it take. So for me, when I buy a stock, it has got to pass a certain set of criteria. I've got a checklist, right? And Palantir doesn't check all the boxes. So, for example, my first, the first box you must check is that a company I own must have consistent free cash flow and net income for at least 5 years. So at the time, Palantir didn't have that yet. It only had its first 2 quarters of positive net income. So I classified it more like a speculative kind of stock, not a one where I'll build a full position in. So I did actually build a full position in Palantir. It was kind of like half my normal allocation. But what attracted me, what got me excited was reading about their software. So it was really understanding the business model, which I think most people don't understand. Now, even I don't understand it fully because I'm not a techie guy, right? But from what I read, I was like, there's no other company that's doing this. That has this AI platform. And by the way, this was before ChatGPT got popular, right? They had this AI thing where Airbus was one of their customers. I think it was Airbus and a few other companies would feed all their data into Palantir, and Palantir could tell them, hey, you need to change this process, manufacturing. You need to add this to improve efficiency. So to me, my metaphor was like a Jarvis. In Iron Man, Tony Stark has Jarvis, right? So to me, my metaphor was, wow, they've built a Jarvis for companies, and companies could plug Jarvis in, and Jarvis could figure out everything about the company. And yeah, so that is what excited me about it. I said, no company is doing this. And I said, could one day every major enterprise in the world use this Jarvis from Palantir? So they could become like the OS of the AI world. Like Windows has become the OS of the PC world, right? Yeah. So that was my thesis back in 2022.
Awesome. Thank you.
This has been a phenomenal conversation. We got to do this again. For those who want to track more of your thoughts, more of your work, since our audience is primarily on the US, where would you point them to, and maybe give some snippets of wisdom for those that are thinking about trading for the rest of the year?
Yeah. So, I mean, you can find my thoughts on YouTube. Just go onto YouTube. I'm on YouTube. And I post my ideas on all the major platforms. I'm on X, I'm on Facebook for you oldies out there. Primarily these are the two places. I'm on LinkedIn as well, but that's a small part of it. For this year, I continue to be bullish on tech, primarily AI related tech, as well as healthcare. Hopefully, right? I think healthcare is oversold. I think that there are a lot of undervalued gems in healthcare. Last 2 years, healthcare has been out of rotation for a variety of reasons. Like last year, being normally on an election year, healthcare never does well on an election year, right? So I think there's a lot of opportunities in healthcare because long term, healthcare is in a secular growth industry. What else? Those are the two main things. And of course, like small caps and cyclicals, it's hard to make a call because it all depends on what happens with the 10-year. So if the 10-year can stay down, I think we could have a good rebound in REITs and a continued rebound in small caps. If it doesn't, then that could be challenging. But the two highest convictions would be tech and healthcare. And actually financials because of the deregulation of the new administration. Financials, yeah.
Well, we'll close off with this one question from Omar from YouTube. What's your favorite healthcare name?
Well, one of the most hated ones is United Health right now. Elevance Health. I think Elevance Health is even more undervalued than United Health. So the managed healthcare companies have been really hated on ever since Super Mario's friend Luigi killed one of the CEOs, right? And you got Novo Nordisk that's been oversold as well. Then insulin drugs, yeah. HCA Healthcare is another one. They own, I think, the largest chain of private hospitals in the US, HCA Healthcare. Thermo Fisher is a very resilient company. There are some great healthcare stocks I love. It's just that they're still overpriced, like Intuitive Surgical. I always love Intuitive Surgical. Could never get in because it's always been very overpriced. And even IDEX Laboratories. I love IDEX, but again, it's still not as cheap as I would like it to be.
Adam, I love the way you think and talk, because it's like, this is to me like the way my father used to trade. It's the way that like the old school guys I used to trade. It's like depth of knowledge, a lot of different ideas, more than just one way approach. Humbled, try a lot of different things. So I personally enjoyed this conversation. We'll have you again for the High Conviction podcast here. Will, any final thoughts on your end?
See you in Singapore. But thanks for the conversation. It's been great talking with you.
Yeah, great talking with you guys. Great meeting you guys. And do let me know when you're coming next. We'll catch up.
Yeah.
Thank you. Cheers.
Right. Thank you. Cheers.